Certainly. The funds we launched in the last month are managed by our sister company in the UK, M&G, and they focus on what we call global basics, global leaders, pan-European and North American fund. And the reason we've brought those to the Hong Kong investor base is that they are sophisticated investment products that offer diversification for investors. They have an outstanding long-term track record, and they leverage our focus on doing proprietary research and doing it well. We're looking at introducing further funds to the Hong Kong market, and we'll be considering China as one of those. What I would like to say though is that for example, the Global Basics Fund leverages the China opportunity, and by that, for example, we own a North American resources company that has mining interests in Indonesia, and exports the produce of that to China. So in a way, investors do have a lot of exposure to the emerging Asia and the China story through something like our Global Basics Fund, but don't have it directly. They in fact in this case own a North American equity. In answer to whether the Chinese market is overheated, clearly it has had a strong rise again this year after a very powerful performance in 2006. Just in the last couple of weeks we've seen the market more subdued. In fact, it's 20% off its high, and I believe that's just investors reassessing their appetite for risk around a bit of global uncertainty. And if anything, from my perspective, it provides, a dip like this provides an opportunity for investors to get back in the market. I can't tell whether the market is going to be up or down over the next week or the next month or even perhaps the next quarter. What I do know though about China, and in particular the emerging Asia story, is that it's a powerful one, and I believe that it's in place for the medium term. So I would very much encourage investors to be investing into this marketplace and taking a 3 to 5 year view about those investments. Prudential's view on the United States is that the subprime issues are still an area of concern. We will get better figures over coming months now about whether that's had an impact on consumer buying habits, and if it has, which we expect it will have had some impact, then that will feed lower earnings growth in 2008. So the prospects for the US market, I think, are being reflected currently in markets where there is a higher risk component being placed on the share price, and hence we're seeing a lot of volatility and a lot of downward movement. We've already brought to the Asian market a diverse suite of funds. So Prudential Asset Management in the last 12 months has launched a REIT fund, yield fund, emerging Asia, infrastructure. So a range of opportunities all the way from the growthy end of the market through to more conservative product offerings. And we're thinking about 2008 in the same terms. So having a spread of opportunities for investors, those that have a higher risk appetite will have growthier solutions. Those that are perhaps a bit more wary of markets will be able to steer them towards one of our more conservative product offerings, probably in more of a structured product or a bond type product.